Just before we jump into the video, I just want to make sure it's clear that I am not a financial advisor. I'm not a psychic. I don't know how the market's going to move. This is not financial advice. Make your own decisions. But in this video, I give you at least my thoughts on the coming market. Okay, welcome back to the After the License channel, whether you're watching on YouTube or listening to the podcast. I hope you enjoyed this episode. We're going to do something a little bit different. I've got some talking points. I want to talk about the recession, the coming recession, the fear around going into a recession. I want to talk about what that means for us. But at the end of the day, I'm going to just talk. We're not going to do all the fancy editing. I just want to kind of give you my thoughts and what I'm thinking about and what I'm kind of coaching my team about here in the Phoenix area. So we're going to touch on the recession. We're going to touch on what we're all seeing in terms of like a macroeconomics perspective. I want to touch on what this means for us as agents or anyone who wants to operate in the real estate space. I'm going to touch on what you should do about it or what you should be thinking about. And then I also want to touch on ways I'm preparing my team, potential pivot areas if we actually need to go and get there. So again, I'm looking at my notes here on the screen. So if you see me look down, that's what it is. So let's just touch on the fear of a recession. You know, if you clicked on this video, it was maybe a fancy title, headline, fear-inducing title. I think some of this with regards to recession is that we're seeing a ton of headlines. We're seeing a lot of fear. I think at the end of the day, nobody knows what's going to happen. And I think that's an important perspective to have. No one knows what the next 3, 6, 12, 18, 24 months really looks like. But if you're someone like me who lived through the last recession and actually operated and sold real estate in the last recession, there might be a lot of fear around it, right? When we think about recession, if we think about the last recession, we think about housing prices dipping 40%, a ton of foreclosures, a ton of short sales. So there is a lot of fear around this area. And I think that's maybe where a lot of people tend to operate from because, you know, it can be a scary thing, right? So let's just talk through what this really means and how we might be able to operate in the real estate space if something were to really happen. But above and beyond that, above just the scary stuff, right? I think it's also important to understand that a recession is defined as 2 quarters with a negative GDP. Right? So 2 fiscal quarters with a negative GDP. It doesn't have to be a 40% dip in the housing market. And I think actually history tells us that it probably won't be, right? And there's actually been recessions where there haven't been huge dips in the housing market. So again, there can be a lot of fear around a recession. There can be a lot of fear around a pullback. But it doesn't it's not going to always end up and be the same thing every single time. So nobody knows. We don't know if a recession is coming. And if it does come, we don't know how big of an impact it's actually going to have on our lives or the economy as a whole, right? So just think about that as you're operating over the next 6, 12, 18 months. So let's take a step back and let's just figure out how we got here, right? At the end of the day, the economy is seeing higher than ever inflation. So that's for a variety of reasons. We had a pandemic. There's supply chain issues with the pandemic. There is a war going on in part of the world. And so all of those things lead to inflation. And the Fed the Fed is working to combat that inflation. That is one of their number one jobs is to combat inflation. And one of the only tools they have to do that is to raise interest rates, right? To almost hamper down demand. And so they are doing that. They want to combat inflation. Inflation is it's not fun, right? When something costs more the next year than it did before, or even the next month than it did before, when prices continually go up and our dollar gets us less stuff each and every day, each and every month, that's no fun, right? So the Fed has raised interest rates to hopefully combat inflation. Okay. And so because they raised interest rates and because people are worried about a potential recession, we're starting to see a pullback. We saw a pullback in the stock market. We start to see people talking about a recession. We maybe are going to start to see people spend less if they worry about a recession. So sometimes it's important to understand that just talking about all of this stuff and having fear around it will actually kind of skew that supply and demand balance, right? Again, up until the last couple of years, we've had a ton of demand for a lot of different things and not always the best supply. And that's actually what, in some cases, causes that inflation. So just the mere fear of recession can have an impact on the decisions that we make and the decisions that our clients make. And then ultimately, as well, the Fed raising interest rates actually has had an impact on mortgage rates. So mortgage rates are up. So, we were in the 2s for a while and the 3s, and now in a lot of cases we are at 4 or 5% interest rate. Okay. So that is kind of the background of what we're having to deal with. So what does this mean for us? Well, the consumer, the people that we service, are dealing with all of these things as well. They're dealing with higher gas prices. They're dealing with higher inflation. They also have concerns about a recession, right? So again, just that fear of a recession or that fear of a downturn and not knowing what that's going to look like might actually cause people to pull back. And again, if they have money in the stock market or 401k and that's been declining, guess what? They now feel like they have less wealth, and that might cause them to pull back. So all of these things, higher inflation, higher gas prices, the decline in the stock market, the talk about a recession, can actually have an impact on demand, right? So again, if you've operated in the real estate market over the last 12 to 24 months, more often than not, right, you've seen a ton of demand and not a lot of supply, right? And so as these things start to operate, we are starting and are going to start to see, and I've seen it in my market, less and less demand, right? And again, if we just think about higher interest rates, the higher interest rates might actually price certain people out of this market. So if you think about whatever the starting point is in your market, maybe it's 300,000 or 500,000 or 700,000. If someone qualified for a mortgage at 3% and can just barely make that payment and barely afford that $500,000 house, and now interest rates have gone up not just to 4%, but closer to 5%, they might now be priced out of this market. So again, affecting the demand. So we have to think about these things. Now, I do want to kind of showcase, and let me just show you what this means. So again, consumer sentiment is important. It's important for us to understand, and it's important for us to think about. But at the end of the day, right, if we look at supply and we look at our market, we have been in an imbalanced market essentially since the pandemic started, right? We again have had a ton of demand. Interest rates have been really low, and we've had an inventory issue. So if you look at, and this is my local market in the Phoenix area, and this is from the Cromford Report, so shout out to the Cromford Report, you can see here that over here on the right-hand side, we are just now hitting 0.8 months supply. 0.8 months supply. And historically, this chart goes back 10 years. This is still really, really low. In terms of supply and demand, we are still at a skewed supply and demand. There's a ton more demand than there is supply, even though things are starting to shift because of the market conditions that we talked about. So I think there's a chance that with this recession, or whether we have a recession or not, there's a chance that we don't actually see a huge decline in prices, or maybe we see a small decline, or maybe we see more of a leveling out. Because again, things have been skewed for quite some time. I think the local average here in my Arizona market is like 1.5 to 2 months supply. Traditionally over like the last 20 years, right? And again, you can look at this chart and you can see spikes where we're hitting 5 months or 4 months or 3 months of supply. And if you don't know what this stat is, right? This stat, month supply, basically means if no new homes hit the market today, how long would it take us to sell out of our current active inventory? And so again, for the last couple of months, we've been operating at 0.5 months supply, which is just crazy. That means homes are essentially selling out. If no new homes hit the market, selling out in a couple of weeks. And again, since interest rates have gone up, this number has started to adjust, and we're seeing it adjust a ton. More active listings, less pending listings. and inventory is starting to build up. And again, a lot of that is that demand. If we don't have as much demand, things are still selling, but they sit on the market longer and supply starts to build up. So again, things we need to think about is this is going to impact our market. It's going to impact what people do. The interest rates are going to impact what people do. If people are worried about inflation and a recession, that is going to affect what people do. But it doesn't necessarily mean that we're going to hit a downturn of any proportion, right? Let alone a downturn of 40% or 30%, right? Again, we might see a leveling off. We might see a slight dip. We're just going to have to wait and see. Nobody really knows. So at the end of the day, let's say there's a worst case scenario and there's a huge recession, or there's not a recession and there's a leveling off, or maybe things just, adjust a little bit. What should you do about it? I think the first thing, and again, this is what I struggle with when I see, some of these real estate groups, is people worried about the market. And then they're like, you know what, I'm going to get out. Maybe I should just quit real estate. At the end of the day, and Ricky Carruth talks about this a ton. So if you haven't checked out Ricky Carruth's channel, I would recommend you do it. Homes get sold every single day, regardless if it's a fantastic market or a bad market. I mentioned I got into the industry in 2008 and all we did was short sales, right? But at the end of the day, homes were still sold every single day. People are going to need to move. People are going to need to relocate. People are going to want to buy and sell. Now, at what levels, we are not sure. But at the end of the day, I think one really important piece is if you're going to operate in the real estate industry, if you're going to be an agent, if you're going to make this your career, you need to decide that you're going to do it regardless if it's a great market or a not so great market. And you need to decide that you're going to make your business work and you're going to do what you need to do. Maybe that's pivoting, maybe that's adjusting your marketing, maybe that's adjusting your expenses to make your business run. I think if you're just in this business to take advantage of really great times, you're not actually ever going to build a sustainable business. So if you want to build a real estate business that's sustainable, that's long-term, then make that decision, right? And say, you know what, whatever happens to the market, I'm going to adjust, I'm going to pivot, and I'm going to make it work. I'm going to be there for my clients. I'm going to, stay knowledgeable and stay up to date on the market. And I'm going to make a decision to push through whatever this looks like. Okay. And so what are the other things you should do? You should study your stats, right? Study your market. Again, I just pulled up a tool that we have here in the Phoenix area called the Cromford Report, where I look at the stats almost every single day. What does supply look like? What does demand look like? What does the average price look like? You should be studying your market. Pull up stats on your MLS. See if they have local services like the Cromford Report in your area, and study the market so that you can talk to potential buyers and sellers and talk to them knowledgeably about what's going on in your market, but then also so that you can understand what you need to do for your business. And then the last thing I'll tell is on what you should do is you should be prepared to pivot. As markets adjust, right? They go up, they go down. Different parts of the business are going to be more profitable. So you should be prepared to pivot if you need to. If there is an absolute worst case, and I'm not saying there's going to be, and I don't think there's going to be, but let's say there's a worst case and there's a 30% or a 20% or a 10% drop in home prices, right? What does that mean for your business? Do you have an area that you can pivot to? Are there options for you to, again, adjust how your business operates so that you can still be successful and profitable, okay? So what are some of the areas I'm thinking about and I'm talking to my team about as potential pivot points, even for just these small adjustments we're seeing, like higher interest rates, maybe a little bit less demand? So the things I'm looking at are people who own second homes, right? So someone who maybe owns a second or a third home, maybe they're investment properties, maybe they think this is the peak of the market, they might be looking to sell. Those might be great options for you to pivot to as someone to market. Hey, do you want to know what your house is worth? Do you want to see how much equity you can, actually cash in on by selling in a market like this? That might be a really great option. Rent-to-own programs. I just did a YouTube short TikTok video on this. I think rent-to-own programs, there's a handful of them across the country that help people who maybe can't afford a mortgage. They maybe don't have enough for a down payment or whatever that looks like. They will actually qualify them for a rent-to-own house, buy the house on their behalf, let them rent for 2 years, and then sell it to them in 2 years. I think those potentially could have a huge impact, especially for those first-time home buyers that maybe are now priced out of this market because interest rates are too high. So look at rent-to-own programs. And then finally, if the market gets really bad, right, there will be options for short sales. There will be options to make money through foreclosures. And there will be options, again, if things get really bad, where these homes that have been built over the last year or 2 years might actually sit open and might not fly off the shelves like they have been over the last 3, 6, 12 months. So there might be options to work brand new build homes and work with the builders on selling those. Now, again, I'm not hoping for a downturn in the market. And I think if anything, we're going to see kind of a flattening out, maybe a small dip. So I don't think we're going to have to worry about short sales or foreclosures. But it's something that you should keep in the back of your mind as an option. It's important to understand too, right? Even if there's a 10% drop in the market, yes, will there be some people that are underwater? Yes, because they just bought and they bought at the peak of the market. But it doesn't necessarily automatically mean there's going to be short sales and foreclosures. If they can still afford their payment, they still have a job, they can kind of ride that out. And for a lot of people, again, even if they bought a year ago, they have probably much more than a couple $1,000s in equity in their house, where if things dipped a small percentage, 1, 2, 5%, maybe even 10%, if they needed to sell, they would still have enough equity to cover that. So those are just my thoughts. It's what I'm thinking about. I think at the end of the day, study your market, be prepared to pivot. Don't freak out, right? Take things with a grain of salt. Take the articles you read and some of the fear with a grain of salt. No one knows what's going to happen. And decide and commit. If you're going to be in real estate, you can do this, regardless if the market is great, regardless if the market's not so great. Take care of your clients, provide value, study the market, be a knowledge broker, and you're going to be able to flourish, regardless of the market, regardless of what happens. And in fact, a lot of the best real estate agents build their business or multiply their business in some of the worst markets because a lot of people get out of the business. So are you going to be someone that gets out of the business or stays in, doubles down, and builds something for yourself and for your family? Okay, if you enjoyed this type of episode, happy to do more of them. Drop a comment below, find me on Instagram, let me know. Thanks so much. Catch you on the next one.